Hello and welcome to my Warren Markets review for what has proved to be a very interesting day for the markets. Well, let's do a detailed analysis of it today. First of all, pre-open of the market, there was news of the deal for 60-day ceasefire extending from the Iranian side, though Mr. Trump has not yet signed off on it at that moment. Until now, he has not signed off. The oil market took it very positively, and oil went down below $92. So clearly, it was a very positive move from India perspective. Second aspect of it, the rupee on the back of this oil price drop also strengthened today. Maybe there was RBI intervention, but came all the way down today to settle at 95.03 when a few days ago we were touching 97. So almost a 2 rupees strengthening of the rupee today. Again, positive for India. The dollar index also weakened today, by contributing to the rupee's strengthening to below 99 today. US interest rates dropped. It is about 4.44%. Remember, we were talking about 4.7 a few days ago. And Indian 10-year interest rates also were like coming below 7 into the 6.98 kind of a range. So very positive setting for the markets when it opened. And it did open well. And then came the first shock for the market today when the monsoon forecast came in at only 90% of the long-term average. There was a huge shock to the market, and immediately a set of corrections started in the market. But it was still a volatile session, sometimes up, sometimes down. And software companies did well because there was some positive news from the US on a company called Snowflakes about the software services. There was also some news that TCS said that most of its 150 odd clients had asked it to become an AI consultant. So there was a positivity building around the fact that there was also, probably the most corrected sector year to date at about 25% almost. So IT was actually leading a kind of a good strength of the market, which was volatile. The monsoon obviously had a negative impact. But then, in the last half an hour of trade, the market just collapsed to the extent that we were finally left with Nifty down 1.5%, mid cap index down 1.3%, and the small cap and micro cap were not down as much, maybe 0.8 and 0.6%, right? So again, a broader market doing better, but the advance decline ratio was not very good at all. For every one advance, there was two declines. I think it was 900 odd stocks rising to 2,000 stocks falling. So clearly a day where there was across the board selling because of the news of the monsoon. But then this last half an hour trade, market just collapsed. Almost every index gave up all its gains. The only index to end in the green to less than 1% was IT. All other indices were in the red, and leading it were most of the indices were at 2% down today. Defense, oil and gas, consumption, all were down almost 2% today. So what happened? And then when you look at the FII numbers, they sold 21,000 crores today. But DIS did their best to support with 16,000 crores. And for your information, just let me remind you of yesterday's numbers. FIS sold 1,000 crores or bought 1,000 crores, I don't remember now. Yesterday, to that it is 21,000 crores of sales. DIS bought 4,000 crores yesterday, today is 4 times 16,000 crores. So what's the mystery and the puzzle behind this? Well, it's a 4-letter word called the MSCI index, which is the index that foreigners rely on to invest in India. That had a rebalancing day today. So in the rebalancing process, there are two major MSCI indices, okay? There's an MSCI standard index and MSCI small cap index. So what happened today? Well, in the small cap index, almost 14 to 15 stocks went out of the index today. Okay, so there was selling pressure on the smaller cap side from the MSCI small cap because 15 stocks left. But the overall MSCI Standard India Index, the overall share of MSCI India in the MSCI emerging markets was stable at 12.4%. Yes, it's come down over the last 2 years from 20% to 12.4, but not yesterday and today. Yesterday and today, 12.4 to 12.3. So largely the index. But what happened was a number of stocks got churned out of the index and churned into the index today first, right? I'm not going to get into stock specific names. Uh, Probably I will do a write-up tomorrow on it. You can read it on my YouTube post, okay? But a number of stocks went out, a number of stocks came in. So there was that churn. Second was, when they brought in these new stocks, they changed the weightage of the stocks within the index significantly. So a lot of stocks got their index share down. They remained in the index, but they lost. And to give you a sense of the kind of numbers, right? The total churn in the stocks in the MSCI India index was $1.6 billion, which is 1,52,000 crores. That was the buying and selling today. And how much was the buying and how much was the selling? Well, the selling was 95,000 crores and the buying was whatever was 50 odd thousand crores, so that it added up to 1,50,000 crores. So there was 95,000 crores of selling today, for which there had to be buyers. And this, why does this happen? This happens on the back of passive funds which sell only in the last half an hour of trade because they want to reduce the tracking error. So they have to see how the index moves, and by the end of the day, their actions should be not very different from the index changes. So they wait till the last moment, and the last half an hour, they come and dump, either they buy or they sell. So the DIIs, so what happened is when I looked at the FII gross sale number, that number MSCI index related was 1.52 lakh crores, but the total FII gross sale and purchase together number was 1.9 lakh crores. So balance 40,000 crores was normal FII action. Why is that? What is that happening? Because there are other FIIs who are managing active funds which a passive index as their benchmark, who can add more or withdraw even more than the rest. So that was the additional 40,000 crores. So then this 21,000 crore of FII selling was a result of 90,000 crore of buying, 1,10,000 crore of selling. So that's how it comes to almost 2 lakh crores, right? So 1.98. I'm giving you rounded numbers. So that huge volume of trade all took place in the last 30 minutes. So DIS, on the contrary, this was almost 2 lakh crore, right? Total FII churn, of which 1.52 lakh crore was the MSCI index related churn. DIS total volume today was 50 odd thousand crores, of which 35,000 crores was buying and 18,000 crores was selling. So their net was 16,000 crores of net buying. But you can see that for the FI selling of 95,000 crores just from the index, or 1,10,000 crores overall, the 95,000 crores of the index buying was in the last half an hour. If the DIs had to put in, they could only put in 35,000 crores to buy that 95,000. So naturally, they couldn't buy everything the FIs could sold, though they may have wanted to, but there was not enough time at the end of the market. Second is that they probably also waited for correction to buy the stocks cheaper. Right? They are being smart. They want to also deliver value to their investors, the mutual funds, or to the institutions if they have DIS. So as a result, that's what caused the massive sell-off in the market. I hope this has served to explain to you, right? Now, obviously, what this means for Monday's market, I'll cover it on my to come on Sunday. But just want to leave you with the thought that today was an extraordinary day with very good news, very bad news, and super bad related action in the market. Look forward to my weekly review on Monday. All the best.